watching MontyTV. I'm Jacki Karsh, joined now by JB and Tony Pritzker from Pritzker Group Venture Capital. Thanks, guys, for joining us.
Thanks for having us.
Let's talk about venture capital, because the number of venture capital firms has actually decreased over the past 10 years. So what does that mean for you guys?
Right, the venture capital firms that couldn't survive have gone away, and the venture capital investors out there, the ones that want to be LPs, have concentrated more on the better firms. So from our perspective, that actually has very little impact on us, other than the fact that there are just fewer guys out there doing it, but there's still significant venture capital. We're very different than a typical venture capital firm because it's evergreen. This is our own capital, proprietary capital. So when we invest in companies, we're not limited by the 10-year life of a limited partnership fund or a 4-year investment period or any of that. We're really focused on building value in the company and kind of aligning ourselves with entrepreneurs.
Now, there have been some rumblings that crowdfunding is kind of shaking up the venture capital world. Why will venture capital always be valuable?
From our perspective, more seed capital, more crowdfunding, $1 million raise for a company, even if it's from 1,000 people, that's terrific, because more companies get started, more opportunities to build great companies. But there's always going to be a need for institutional capital. You're not going to really be able to crowdfund a $10 million round in a company, rarely anyway.
We're going to be with the company as they grow. And that isn't always the case with a typical venture firm.
A lot of people know about California, New York, Massachusetts. I know you have offices in Chicago, but what are some other markets that you're looking at? Are you looking towards emerging markets?
What we're really interested also in looking at are the underfished ponds, where there's not enough venture capital, but there are terrific entrepreneurs and great engineers.
So where are those?
Well, Austin would be a great example of that. There's not enough venture capital in Austin, certainly not enough based there. LA is actually a great example of a ton of great companies get started in LA, but there are very few LA-based funds, and we're one of them. So if you look across the country at some other ones like Research Triangle Park, similarly, not a lot of funds based there, but a lot of great companies. A lot of it depends upon where the research is being done, where the really great technology, where the engineers are going to school. Those are areas where you'll often find burgeoning environments. Ann Arbor, Michigan, and Detroit. Oddly, I know everybody thinks Detroit is just down and out, but what's come out of down and out Detroit is
innovation.
Innovation, exactly. And in fact, I like to say, in Chicago there was a great fire in 1871. It really wiped out the city. And you know what happened in the 20 years after 1871's Great Chicago Fire? The greatest period of innovation and entrepreneurship probably in this country for 20 years straight in Chicago. And so finding a city like Detroit where the local capital has been willing to invest in, let's rebuild this place, and they brought in a lot of new young talent, technology talent, to help them do it, you start to see some really interesting green shoots.
There's been this talk about too many unicorns. We're calling too many companies amazing. It used to be like they were rare. Now, so why do you react to that?
I don't want to say that anybody's lying. It's always a little harder to execute things that you're trying to do, and you run into a few bumps in the road. And that's where I think also keep your valuation reasonable, take a little bit extra money, and go forward with that.
So, everybody wanted to be labeled a unicorn, and so they wanted to have that marker of $1 billion headline valuation. The reality is that's not always great for the entrepreneur, because when times get tough, and you've put this big puff of value underneath the latest round, which has preference, by the way. When things get tough, the preference is just going to crush all that value that the entrepreneur thought they created. So entrepreneurs are much better off taking a little bit more dilution at a little bit lower valuation, maybe even taking a little more money to survive the tough times when venture capital isn't so readily available. Guess what? We're sort of entering one of those periods, and so a lot of companies that are now labeled as unicorns are going to have a tough time because the investors at the top of that stack are going to start to stuff them down.
So are the years of plenty over?
I don't think they're over. I think that these things go in cycles, right? We've seen it in the past where things get overvalued and then come back down to reasonable, and then there'll be another time in the future. But, capital markets put a lot of pressure on us, and, it's a cycle. I'm not saying that we're, gonna crash into the ground at all. But I think rationality is taking hold.
And the truly great companies will get great valuations.
Yeah.